Hi everybody, Russell here from VectorVest. Let's get into the weekly video. So the video this week is all about Australian mortgages. So as we know, some very interesting changes taking place in the Australian economy at the moment. It's becoming more acceptable to work outside of a given office. So work from home or a different office location. And as such, many workers have jumped on that opportunity to say, okay, well, great, I don't need to go into work every day. I've been entrusted to work from a home office. Well, my home office is a bit small. Why not get a bigger house where I can have a better office? The kids can have bigger bedrooms, and we can have a bigger backyard, for example. And as such, we're seeing a big shift. A lot of people moving out of the major cities more into the regional type areas. All right, at least that's what the news articles are saying. How long that lasts for, I don't know. But what's taking place right now, we can see it. All right, so let's do this. I'll bring this report over here. I've put the link into your weekly essay, right? So this is the Australian Bureau of Statistics. And it's interesting over here. This is one of their latest reports. Look at this. So this is new borrowers accepted loan commitments. Housing, owner occupier. So over a year, up 38%. So this is new borrower accepted loan commitments, owner occupiers, right? Investors up 10%. But you can see most of it is new owner occupiers. Is it perhaps those that were living close to the city, perhaps renting? Now those people are effectively able to work a little bit further away from the office, not having to go into the office, maybe only once a month potentially because they're working remotely, and as such, they've moved out to more affordable areas and as such become owner occupiers. That's my general sort of thinking behind it. Some articles out there sort of support my view, but there could be all sorts of reasons as to why this is the case. But having said that, there has been a change. So a big increase in owner occupiers and investor loans are back on the rise again. So this bodes well for mortgages. Now you'll see up here, this tab over here. So I went to this website here, finder.com.au. Now please, I'm not promoting any website per se. I just found this one when Googling different mortgage rates. And what was interesting over here is I decided to have a look at some different rates. Okay, so you can see over here, this is a 3-year fixed rate, for example, 2.19% by Macquarie. Amazingly low interest rates. If you go back 5, 6, 7 years ago, you went to your bank and you asked for a 3-year fixed rate, it would be about 6 or 7%, wouldn't it? If not higher. Okay, so look at that one there, 2.19. IMB Bank here, for example, look at that. Wow, below 2%. All right, and you can have leverage up to 95% for owner occupier, for example. So you can see that times have changed. I mean, this is 3 years fixed. Below 2%, phenomenal. 5, 6 years ago when I was looking at my personal mortgages, right, for my given property, I would have loved that rate at that time. But times have changed, so interest rates are pretty much at all-time lows, and as such, it's driving in further demand for people to go in and pick up property. As such, as the demand for property picks up, the demand for mortgages pick up, and that's where I come in and get VectorVest to analyze the mortgage companies out there, those that will lend to you, the home lenders, so to speak. So let's jump into VectorVest. So where I want you to go once you're in VectorVest, click on Viewers, and then you can go to Watchlist Viewer, and then over here, this is the one you want to open up, Overview Watchlists, and there I've put it in for you. I've called it Home Loan Providers. All right, so the team will set that up there for you. Let's just right click, auto fit all columns, make it nice and neat. So there it is. All right, so watch lists there, overview watch lists, home loan providers. I'm not saying that this list is the definitive list. It's got all the major banks and it's got some of the key lenders out there. So you can run your eye down through there and have a look at the 18 that we've populated in there for you. Okay. With that said, let's go and have a look at the bottom line, so to speak, in terms of how this watch list stacks up. So come down to the bottom here, watch list average, right click, view watch list average graph. Let's fire this up. And on here, I'm going to put on the earnings, right? So I'll just, I'll change the layout to being a VectorVest simple layout, for example. Okay, so we've got earnings by default. I'll turn off all these other indicators for now. Just have the price and the earnings. Now, this is very telling. This is interesting. Look, earnings continue to slide down, but the home loan providers continue to go up. So one does need to be careful. We know that a falling set of earnings will lead to a falling share price. In this example here, a falling portfolio, all right, average price here. So just be careful. However, having said that, the uptake in mortgages, there must be some winners in this crowd here, because certainly we've seen, per the Australian Bureau of Statistics, that there is a demand for those mortgages. So who is benefiting? Now, just be mindful too that when you look at the earnings across some of these companies here, you might say, well, hang on, I don't understand. If mortgages are picking up, why aren't the earnings profiles for some of these companies picking up collectively on average? It's because a lot of these companies, it's not just simply residential mortgages that make up their earning profiles. So none of these companies, apart from a few, are just pure sort of residential mortgage type companies. So first thing first, let's do this. I've got home loan providers. I'm going to right click here and I'm going to make a copy. All right, so we'll make a copy of this list. So you just right click, select make a copy. And what we're going to do now is we're going to go through each one of these stocks and remove any of the stocks where the earnings don't stack up. Okay, so I'm going to click on the first one while holding my shift key. I'm going to click on the last one. So this is going to select all the stocks, and then I'll graph, all right, selected, or you could have selected all. So graph selected. And I want us just to quickly move through here and pick on, I'll turn all of this off for now, pick on all the companies where the earnings are falling over the last year. All right, so here we are, the last year, just in current times. Right, on average, very nice. Yeah, a little bit of a tick down, but I'm not upset by that. It's holding up very well. All right, so let's make a note here. It might just be quicker to jot down the ones where the earnings are rising. Okay, so let's make a note of that. All right, so RMC, it's my first one there. Yep, that stacks up. No, certainly doesn't there. All right, no. This one here, too bad, just a little bit of a turnaround starting, so I'll make a note of that one there on my list as well. I'll keep going. No. Just starting to turn the corner. Depends how aggressive you want to be, but nonetheless, we're just starting to see that turnaround here. So I'll jot that one down. That one here is holding up as well. Not rock solid, but on its way up. Okay. No. No. Shouldn't be any surprise with the big banks here. No. 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 Not quite, still, just don't be fooled by this profile. It's still negative. It's looking to break above, but I'm being conservative here. I want to make sure that the earnings are well on track and rising. Okay, so here you can see some previous lines I've drawn in the past over here, just to show you how the earnings were starting to fall and how things continued to fall. So just interesting there on VectorVest. You can keep your old lines that you've drawn on in the past. All right, so this is a set of lines that we drew in there per a Q&A session. So if you want to remove all your lines, there we are. On the drop down, clear all drawings. You can do that to clear them out. Okay, I'll keep going a bit more here. No, no. All right, it's a bit of a mixed bag, but there are one or two that jumped out. All right, so RMC was one that jumped out. AFG was another one that jumped out, so I'm going to then unselect this. YBR was another one that jumped out. All right, so there we are. Unselect that one there, and ABA. Right, so I've unselected these. The rest that are selected, I'm going to remove the ones that are selected. So delete, selected. Just another way of doing it there. Okay, there you go. There are 4 stocks that I've narrowed it down to where the earnings profiles were showing some good promise. Let's come down to the bottom here. Again, right click, view watch list average. Here we go. And pull that back a tad here. This one here is starting to show much better set of earning profiles. I like that now because you're starting to see the earnings coming up in addition, all right, to the average of those shares starting to turn around. You can see here, this is the coronavirus market sell down, a lot of fear and panic, but since then, investors are coming back into the market, and look at how these companies, these 4 given companies, are starting to benefit from a big uptick in the mortgages there, at least from a residential perspective. Residential mortgages starting to pick up, right? So there we are. The residential mortgage market, here are the ones that jump out to me: Resimac, AU Finance Group, Yellow Brick Road, and Auswide Bank. Now, please, as always, this is not financial advice. I'm not licensed to give advice. Please do speak to your financial professional. But using the power of VectorVest straight away, I'm able to narrow down 4 lenders out there where the earnings profiles are holding up fairly well in current market conditions. Now, let's do one last check and balance here. Let's just go back to the start of the year. Right, so if I go back, let's see over here to the 4th of January. Right, so I'll set it back as of that date there, and let's quick test all as of 4 January through until my current time of recording here, that being the 16th of February. Look at that, up nearly 12%. Resimac is the one that jumps out with the best returns. Okay, so of those 4, Resimac there seems to be stacking up very well. And look at that, right? So wonderful set of rising earnings at the moment. Share price powering on. Since the last sell rating, the next buy rating thereafter occurred there. Where was it? On the 13th of August at $1.13, and look at that, up to $2.50 so far. And the last thing I want to leave you with there is, when you're looking to buy a stock, don't forget your most important aspect: market timing. So if I overlay our most conservative timing signals, that being our confirmed signals, you can see over here, this is for the market, not to be confused with the stock. So this is for the market. So overall there, that's where the market was rising. And that's where the market was rising. So in recent times, the market's rising here. So you're looking to pick up stocks in a rising market. Well, look at the stock here. You see the earnings coming up nicely. Market's rising. There's the entry signal with a confirmed signal, and the company is buy rated. If you're a bit more conservative, maybe you wait a day or two to see the earnings popping up again, and there you go. Wow, look at that. The earnings going gangbusters. We're in a confirmed up buy rating. Good time to consider jumping into that stock, for example. Okay, so I hope you got a lot out of this. Until next week, bye for now.